we can have capitalism that is mindful. We can have capitalism that actually works for other people. In fact, study after study after study has shown that this is the best path forward. We don't live in a world that is separated by demographics, or like we live in a world where everybody is kind of in the same soup together,
Yeah.
and it's just poor business sense to exclude groups because of our own inherent and outdated values.
Welcome to Women Disrupting Tech. My name is Dirk Jan Upkes, and on this podcast I give the women who work in tech the platform they need to inspire and empower each other. Join me on a journey into the world of entrepreneurship, funding, biases and role models to discover the strategies for success in the tech industry. In other words, how women can disrupt tech. Are you ready to listen? Hey, welcome back to Women Disrupting Tech, and thank you for listening to episode 84. Are biases in artificial intelligence and in risk models costing us more than we know? And how does reducing these biases unlock both fairness and profit? In this episode of Women Disrupting Tech, Carla Canino shares her journey of building Kindlee and her mission to improve financial inclusion through fair and unbiased AI. We explore how biases in artificial intelligence and risk models exclude millions from financial services, how this is costing the industry upward of 400 billion US dollars per year, and how reducing these biases therefore creates not just ethical wins, but also real profit opportunities. Plus, Carla will share her unique and inspiring perspective on being a solo founder in tech. So when you're ready to listen and learn about the Kindly case for fair, unbiased and profitable AI, please welcome to Women Disrupting Tech, Carla Canino. Hey, good morning, Carla. Good to have you. Question I always ask at the start of the podcast is how you got into your current job or current position.
Thank you so much. I'm so happy to be here. Thank you for inviting me. So, great question. I have been in the financial industry for about 15 years in
Hmm.
different sides of the financial industry, right? So, I worked
Yeah.
for payment companies, I've worked for large enterprises as well. And I've worked on the product side, on the payment optimization side. So, in addition to the financial technology side of things, I've also taught inclusive product management, which is essentially how to build products that do not unintentionally exclude large groups of people, right? And
Hmm.
how to also quantify the value of these large markets.
Hmm.
And so, from both my experience in financial technology and inclusive product management, I've noticed that we as an industry tend
Hmm.
to undervalue the what we would call vulnerable populations, or large segments of the population that are typically not very well understood.
Hmm.
And that typically means that in risk models in particular,
Hmm.
what we tend to do is over decline or flag behaviors that we don't quite understand, because a lot of the models are built perhaps modeling white male behavior, or
Uh-huh.
the dominant side of the population.
Yeah.
And so that kind of inspired what we're doing now with Kindly, right? What we're trying to do is demonstrate not only that there is value in bias reduction, or in in looking at the way that we are calculating the risk,
Hmm.
or mispricing the risk of these populations, but also that there is indeed financial value, right, to these populations, and to improving the accuracy of models. So that's essentially what led me to start the company, is looking at the opportunity. I personally had a really weird experience a couple of years ago, or a few
Hmm.
years ago. In the middle of the pandemic, I decided to open a savings account with a large bank here in the Netherlands. I came
Uh-huh.
here as an expat, and at the time I was in a wheelchair. I have a
Yeah.
disability. And it was funny because, at least at the time, there was no accommodation for, for disabled people.
No.
And so, unfortunately, I couldn't physically go to a branch to authenticate who I was, despite
Hmm.
me having deposited almost 10,000 euros, which
Hmm.
was, they of course accepted it, but then because I couldn't authenticate it, their models flagged me as high risk. And so for something like 6 months, because of the pandemic and everything else, I
Hmm.
couldn't actually authenticate myself, which was super frustrating. I couldn't access my money. So that actually taught me that it's not just, or it wasn't just about um, about the models, but it's truly about understanding the journey of vulnerable populations, right?
Yeah.
Understanding the journey of people who are not necessarily represented correctly.
Yeah. And in your case, it's there was a sort of double uh, penalty, I would say, because you couldn't physically go to the branch
Yes.
because it just wasn't accessible, and in
Yes.
COVID it was difficult to begin with, and B, you were flagged,
High
but
risk. Yeah.
as high risk,
Yes.
and then as a result, you have to go to the branch
You have to go to the branch.
because
Exactly.
that's how the regulations have been
Exactly.
written.
Exactly.
When there was no pandemic in sight whatsoever. I can tell
Exactly.
you from my own experience because I uh, I was involved in the early parts of the implementation of that.
Yeah. Yeah. Exactly.
So
And so,
yeah, but it
absolutely.
indeed, to your point, it's really like we write those regulations, especially for companies like ING and ABN AMRO. You write those policies
Yes.
from your Dutch perspective.
Yes.
And in within ING, we actually did. I think we did a good job to include also the parts of the world where it was not standard white male guys running the show.
Yeah, yeah. I think that, one thing that we forget is that when you have to, especially for a disabled person, when you have
Mm.
to interact with the world, you need accommodations, right?
Yeah.
And unfortunately, at least at the time, right now it might be a little bit better a few years, later, but at the time, not having a flow for to authenticate or to validate or to accommodate someone with a
Mm.
disability is the beginning of a lot of essentially misflagging, right? Like,
Yeah.
and I'm not alone on that. Like, so worldwide,
Is
depending on
that?
where you are, yeah.
Yeah. Can I just ask you? Do you think that's because the flags are set up wrong, or because the execution as a result of the flags is done wrong?
It's because it's a great question. Uh, I think that it's because the journey is misunderstood, because we miss contextual cues,
Uh huh.
because we miss, we lack empathy in our user journeys.
Uh huh.
And once you lack empathy in your user journeys, you create rules that do not represent them.
Uh huh.
And when you create rules, and when I'm talking about rules, I mean both AI and
Mm.
regulatory
Yeah.
requirements.
Mm-hmm.
When you create those rules and you literally exclude, right, unintentionally or not, these groups of people, then by definition, you will cause churn. You will cause what is normally called in the industry insult rate, right, like
Mm.
being declined when you are a perfectly good user,
Mm-hmm.
and you will, especially now with AI, you will exponentially over decline people with that particular profile, right?
Yeah.
So it's I think it's a little bit of both. It's simply
Yeah.
not empathizing with the needs of populations that do not align with the majority. That's
Yeah.
basically what it is. And so we think that those people might be high risk when it's truly, yeah, just simply not understanding their needs.
Yeah.
And that happens to the elderly. That happens to a lot of different population segments that are simply not necessarily behaving. Perhaps someone that doesn't have English as a first language.
Yeah.
or that is new to a country, so they don't quite understand how the system works, and
Hmm.
they might over apply for something, or
Yeah.
leave an application half done. So the way that we have built our systems and our regulations, unfortunately as well, a lot of times just ignore that these people need just additional accommodations,
Yeah.
and that is being translated into the risk systems and the machine learning and AI implementation, and of course that has a gigantic impact.
Yeah.
um, I read somewhere that which is crazy, that machine learning and AI miscalculations cost the industry something around $443 billion annually, which is
Per
crazy.
year.
Mhm. Of course, because if you're thinking about this is transaction based, not
Mm,
account generation based, right? But so if you're thinking about the amount of transactions that are moved all over the world,
mm.
that's nothing. That's that represents around
Yeah, that's
15%, something like that.
yeah,
Uh, so it actually is quite accurate, and that's only on the transactional side, and that's what we know,
yeah.
right? There's a whole that's a tip of the iceberg, as they say.
Okay. So, how can we fix this? So
Mm,
we have a system that is sort of not accommodating for people with a disability, people who are elderly, people who have a different migration background,
mhm,
uh, maybe also neurodiverse people in this case. How can we sort of fix this system, and especially in terms of AI, then
mm.
to be fair, to not to and also to the point for the financial sector not to misprice those risks.
Yeah. So it's not an easy problem to solve, and it's not an easy solution, right?
Hmm.
What is more is that, at least in my view, it's what we would call evergreen, both problem and solution,
Uh-huh.
because biases change all the time, right? Like your
Hmm.
profile of biases changes over time. The like sociological nature changes, and then essentially every country, every region will have a different flavor of bias,
Hmm.
right? So first of all, awareness. It
Hmm.
sounds really, really easy, but it's actually quite difficult to be both self-aware and aware in the system.
Yeah.
And I think that, regulation like the AI Act is kind of leading us in the right path, in the sense that it's going to require audits for fairness and biases.
Yeah.
And this is a tricky conversation, right? Because the way that they categorize the risk of some of these algorithms,
Hmm.
it's really interesting. You have, it's essentially depending on how it impacts people.
Hmm.
Um, so when we're talking about the high risk category, we're talking essentially about algorithms that might prevent people from accessing economic opportunity. So we're talking about, people being able to open bank accounts, or accessing loans, or accessing life insurance, or
Hmm.
accessing even employment,
Yeah.
right? Also, some of the high risk categories include biometric authentication,
Hmm.
as well as some healthcare implications as well, or healthcare models.
Hmm.
Um, but so what this tells you is that a few things. So biases, or discriminatory models.
Hmm.
I know this is controversial, but they need to exist, because you cannot loan to everybody, right? Like you
No.
cannot
No,
exceed.
there's people who are purposely excluded because
Exactly.
their let's say their credit risk is too high,
You got it. Exactly.
and or either they get let's say a higher interest rate or they are not accepted.
Correct.
That's part of the business.
That's part of the
So
business.
that's intentional, but we're talking about the unintentional exclusion part
We
here.
are, yes. And it's the same thing, for instance, for things like human resources related algorithms, right? Like if
Hmm.
you're looking for an employment, then you need to be able to find the top best candidates, right? So
Yeah.
the systems need to be somewhat discriminatory. However, when we're making assumptions, or when we're baking in our assumptions
Hmm.
into the models that make these decisions, that tends to exacerbate inherent biases that we produce, right? Like the
Hmm.
the model creator produces. And
Yeah.
then we're layering that with external data and additional maybe internal data or internal gaps that are going to overly decline certain groups. So there's a few ways in which you can prevent this or mitigate this.
Hmm.
First of all, understanding your entire data lifecycle.
Hmm.
In other words, looking at the algorithm result is not enough. And that is, I think that's the biggest mistake that people make, is
Hmm.
that when you're looking at the outcome of the algorithm, you're not necessarily having insights into how you produced, or how you created that algorithm in the first place.
Hmm.
So looking at the user journey, looking at the way that you validated the data, looking at the data itself,
Hmm.
whether you are overrepresenting or underrepresenting. And I think above all, being able to gain insights or working towards gaining more insights and being more empathetic towards the groups that are underrepresented
Yeah.
are not only going to result into better algorithms and more reduced bias, like at the
Mm.
tail end, but it's going to help companies create better products and create better journeys and create, more inclusive, a more inclusive relationship with the consumers.
Yeah.
Um,
And also help more consumers.
of course, absolutely. I think that the concept of mispricing of risk, which is not my concept, by the way,
Mm.
I have to credit actually one of my pilot customers, which
Mm.
we'll talk about it hopefully next time. But
Mm.
I think that's a very very good point, right? Like when we don't understand our customers truly,
Mm.
we see everything, or we see many behaviors that are not the norm as high risk.
Yeah.
And so so say, very much like similar to what happened to me, like if a person has Parkinson's,
Yeah.
even today with automated biometric authentication,
Mm.
their ability to authenticate themselves, if they're shaking, is going to
Yeah.
be hindered, right? And
Yeah.
then they won't be able to access their account, and then they're going to be locked out of the account, and they're going to be flagged as high risk, and then that person either is not going to be able to access their the money already existing in the account, or they will be declined for loans and that sort of thing. So I think it's important that companies understand the financial impact of already misrepresenting not only the customers they have, but the potential customers that they could have.
Yeah. And then what I'm hearing you say is also to, in terms of mispricing, it's also that you don't you risk losing or not accepting customers that you otherwise might have accepted.
Absolutely. The other side is, and this is more relevant to the US, there's a very good example of how these things affect negatively companies. A
Mm.
few years ago, I don't know if you remember the Apple credit card. I believe it was
Mm.
like on the back end, it was sponsored by Goldman Sachs, if I'm not mistaken.
Yeah.
But all of this is to say the Apple credit card was, a very publicized product, and it ultimately failed. And
Yeah.
one of the reasons why it failed is because it quite literally discriminated against some consumers, specifically women. So they did several tests, and in households where, and at least in America, you have a credit score, and of
Yeah.
course, if you're married, typically you would have a mutual credit score because you're sharing a lot of the same debt,
Yeah.
and a lot of the households have double income and a similar income, and so they did that test where, like, if both people in the household had this shared credit history and shared income, and they both are high earners, the man would have something like 50% higher credit limit approval than the woman. In other words, the credit limit extension for
Because of the
women,
system, how it was set up.
because of the system how it was set up, but also, yes, because this is an
But why?
example of how the yes
It may, yeah,
the
it makes
a
me wonder why the hell they launched that, because this should have been picked out as part of
Yes.
the product approval.
I agree. I agree. As part of the tests,
Yeah,
etc. But the reality is that, unless you test it in the same household, you like it would be difficult for somebody to say, oh yeah, these people actually have the same profile. Why is the man getting a much higher credit limit
yeah,
than the woman? Uh, Unless you're specifically looking for that, you probably will miss it.
yeah.
And the reality is that up until very recently, this wasn't really
Wasn't
something
on the
that
radar.
it wasn't on the radar. It wasn't
No.
on the radar. So I think that's one of the most prominent examples of how these things matter.
Yeah,
And there's many other reasons why that product failed. But of course, that affects the credibility of the product from the get go, right?
yeah,
Who's going to use a product that knowingly extends lower credit limits to women? And I
yeah,
think that's a huge lesson for anybody on this side of the pond as well, right?
yeah.
We're missing a lot of times. We're missing huge segments of the population. Like disabled people account for something between 20 to 25% of the population in some areas,
Hmm.
and that's not a small amount.
No.
Um, People with mobility issues are roughly around half of that. So we can say safely that around 10% of the population have mobility issues. We're not even talking about cognitive disabilities, et cetera, right? So
No.
the way that we're building products a lot of times excludes that, 10% of the population.
Yeah.
And that's just one segment. We're not talking about women. We're not talking about expats. We're not talking about even pregnant women or, neurodiverse people, as you said. So um, being able to better understand these segments is not only empathetic and required from a regulatory standpoint. It's
Hmm.
actually better business.
Yeah. So how does that differ from the US to Europe then?
Well, it's funny. The U.S. actually has had regulation for a long time, like the Equal Opportunity Credit Act,
Yeah.
and it has evolved through for a long time. But also, the U.S. has had a history of um, different kind of discrimination. For instance, the fact that some neighborhoods might be more predominantly, African American, for instance.
Hmm.
So those zip codes historically were kind of, flagged as high risk uh,
Hmm.
by a lot of banks. That led to like historic discrimination and in loan extensions for be able to acquire loans for
For
houses, etc.
cars, for
Exactly,
appliances.
exactly. And so that's just one aspect, right? Like if we're talking about how the US has approached modeling, we also have to remember that the US has a standard credit system that doesn't necessarily, is not the case in Europe. In Europe,
No.
every single country is different. So it's a lot more complex.
Yeah.
And whereas, ironically, in the US, I think that because it has a history of these legislations affecting the way that big financial companies are being reviewed, and the,
Mm.
and there have been audits for a long time. That hasn't necessarily been the case to the same degree all around Europe. Every country has its own way to address this. Every country has its own way to create credit, and every country has its own rules, essentially.
Yeah,
So
it's more fragmented.
it's much more fragmented, and the
But is it
profile.
also that Europeans? I'm reading a book about how the masculine society came to be. Um, I'll put a link in the show notes. By the way,
Okay.
it's really really good and well researched. But one of the things is that in Europe we sort of think, and we have always thought that we have are like the most advanced society ever.
Mm,
So whatever happens in the US doesn't happen to us because we're past that.
yes.
What do you say to that?
I say that America also thinks that they're the land of the free and that
Yeah,
they're completely equitable. And I just gave you an example of how they're not, right?
yeah,
So I think that we need to be careful with this. Like we always like our internal perception of the continent and the behavior doesn't always represent the reality for all of us,
no,
right? I think we all know that Europe has some very high index of discrimination towards some groups of people, predominantly, from Arab countries, for instance. And that is reflected in the way that they're included in the financial system and other systems as well, by far.
And
Uh,
are we less far in terms of awareness in Europe than in the US?
I think that that's a good question. That's a really, really good question. I think that Europe has the willingness to look at itself and evaluate these gaps. I
Hmm.
think that Europe is learning and implementing a lot more regulation that, yes, that prevents discrimination or helps fix the gap.
Hmm.
But there's also, I mean, actually, in pair with the U.S., there's also um, that perspective of, I don't think, like that people believing that they're equitable and they're inclusive when truly the data says otherwise.
Yeah.
So there is, what I would say is that there is a huge gap between what we believe our countries are and what
Mm.
we actually, what we actually perform. I mean, again, as a disabled person, uh, it's much more difficult for me to navigate in Europe than in the US. And regulation to protect, disabled people hasn't really existed until recently
No.
in Europe. And so culturally, I also feel it, right? Like it's
Yeah.
a completely different monster. So whereas as a woman, I feel more protected here than in the US. So I would say it's not a blanket. It's very much depending on who you are. It's very much depending on where you are. So
Yeah.
I think the devil is in the details and in the nuances.
Yeah. But I do actually believe that Europe is less advanced where it comes to awareness that we discriminate. We're getting to grips
Hmm.
with it, but we still see, I think, to a large extent, our colonial past as a sort of hero
Yeah.
type of journey,
Yeah.
not necessarily for what it was. Is from a business perspective really good for our economy. Don't get me wrong, uh, but from a cultural perspective, there were some serious backdrops to be, or serious bad stains in the
Yeah.
in the in our clothing, especially
Yeah.
for the Netherlands. Because I always compare the U.S. to the Netherlands in terms of how they look at slavery.
Mhm,
In the
mhm.
US, it's much more, yeah, we did that, that was bad, we shouldn't do that. Whereas here in the Netherlands, we were not quote unquote involved. Even though the
Sorry.
VOC was one of the largest slave traders
Yes.
in the world in the 17th and 18th century.
Absolutely, absolutely. I mean, oof, this is a really difficult conversation, right?
Yeah.
Because you're right, you're right. Um, I wanna say there's no black and whites. We live in a world of grays, I think. Because in
Yeah.
the US right now, I feel like, I think that the recent elections will tell you, right? Like there's this pullback of
Yeah.
people saying we've been too woke or whatever that means, or too inclusive, and pulling back on a lot of the historic regulation to balance out the gaps.
Hmm.
Um, Eh, However, I do notice exactly what you're saying here, right? Like, I think that the world and the Netherlands itself sees itself as very inclusive. But as I said, right, like the reality is that you guys didn't even have regulation protecting disabled people, and
No.
until 2 minutes ago,
Yeah.
historically. And indeed, like this and many other countries in Europe are not only do they have a history of colonialism, but and let's be real, that's also how a lot of the European countries have had or made the fortunes that they made.
Yeah.
Whether or not they have kept them, that's a different story.
Uh-huh.
But all of those assumptions are baked in the models that we create,
Yeah.
how we evaluate people, what we value in people. And I'm not sure in other countries, but at least here, a lot of regulation, a lot of these models are, and a lot of the culture is inherently exploitative, right? Like, and we don't see it as exploitation. We see it as good business sense, but
Yeah.
it's truly exploitative. You
Yeah.
know what was one of the funniest interactions that I've had regarding what I'm building is I went to this event at the Next Web, where these two women who have a fantastic museum here in Amsterdam. It's called the Next Museum.
Hmm.
We got introduced, and I told them a little bit about what I was doing with Kindly.
Hmm.
We were reducing biases for for AI models in financial technology, and her immediate answer to her question to me was, "Also, you're fighting capitalism."
Oh,
And it was such a fun question because it shocked me at first, but I think it says a lot about what we expect capitalism to be, right? Like
yeah,
what we expect it to be exploitative, we expect it to be innately discriminatory,
yeah,
we expect it to be racist, we expect it to be, discriminatory in the worst possible sense.
yeah. Sort
And
of greed is good, but then in the
exactly,
worst way.
exactly, exactly. We don't realize that, we can have capitalism that is mindful. We can have capitalism that actually works for other people. In fact, study after study after study has shown that this is the best path forward. We don't live in a world that is, separated by, uh,
Hmm.
yeah, by demographics, or like we live in a world where everybody is kind of in the same soup together,
Yeah.
and it's just poor business sense to exclude groups because of our own inherent, and outdated values. So I think, it's just smart for the future, not only for our future, but for the generations that are going to be actually impacted by all the models that we're creating today,
Hmm.
right? Because we need to think about, the next 5 years, the next 10 years, the people that are coming into the system,
Yeah,
how
for
they're going to
sure.
be affected by this. And the fact is that if we build models now that reinforce a lot of these old values, a lot of
Hmm.
these,
Yeah.
very exploitative, and sorry to say, but very ignorant assumptions on people, then
Yeah.
we're going to perpetuate and exacerbate exponentially the same outdated risk factors or flags. So that means that, our kids are going to be impacted. Our, if we have
Yeah, to put
maybe,
it in a really bad way, it's a great
yeah,
way to cement the old
yeah,
ways of thinking into the future.
it's way worse than that, because we forget that AI is exponential.
Yeah,
So it's not just cementing, is exponentially validating and worsening
yeah,
those models.
expanding actually.
Expanding, exactly. So if today, for, just as a example, this is not real, but say that, you as a model, you were over declining disabled people by 10%, right?
Hmm.
Like like typically disabled people, or more, typically today is much much higher than that, but let's just say 10%. 5 years from now, because of reinforced learning,
Hmm.
and because of, your own, like the banks or risk officers
Hmm.
own biases, the way that they're going to bake that into the product, that might mean that in 5 years 50% to 60% of people with a disability will be declined. So it's
Yeah.
not just, oh, we're perpetuating this, we're actually worsening it by a factor of 10 or 100.
So it's really exclusionary in that
It's
way then.
absolutely exclusion. It's dangerous.
Yeah.
Absolutely, it's dangerous. That's exactly the risk that people don't see, is that AI systems are not. This is no longer rule based systems, right? Like
Hmm.
this is not a 101. This is systems that learn from past behavior and will, predict future behavior based on that. So and will speed up those same decisions. So yeah, that's exactly the danger. If we, like the Apple example, if you are
Yeah.
extending lower credit lines, and if you let that go on for 5 years, 10
Yeah,
years, then
then it's new normal.
exactly, absolutely, absolutely, is the new normal.
Okay. So I want to come back to the new normal later. What I sense a bit is that we don't see those risks. And what I sense a bit is that is it we don't see the risk, by the way, or we don't want to see the risk because we
Mhm.
think we're good people.
Yeah, that's a great point. I feel like everybody wants to see themselves as a good guy.
Yeah.
Um, and also, like, psychologically, we love the status quo,
Yeah,
right?
for sure.
We, like, markets love the status quo.
Hmm.
It's funny, there's this running joke around venture capital because they're capital, but they're not very venturous.
Yeah. Uh-huh.
And it's because, yeah, like the way that we see risk is very fixed,
Yeah.
and it's very comfortable, and the entire financial system is predicated on that particular flavor of
Yeah.
risk, right? So I think it's several layers to this. Is Yes, we want to see ourselves as virtuous, but we also like the discomfort and the cost and the difficulty of being the pioneer on something. Essentially, the friction to change is quite high.
Yeah.
There are, however, and it's funny, like, there are companies that prioritize inclusion, that prioritize, looking at risk models in a different way. And those companies, again and again, have performed better,
Yeah.
including here in the Netherlands. So,
But why
it's,
then?
mhm,
Why then can we not change our ways? If the data is there, if the stories are there, if even the role models are
yeah,
there,
yeah,
why is it so difficult to change?
because
Why
we are
do we
what we
still
measure.
keep applying the not invented here syndrome to this?
Yeah, yeah, because we are what we measure. So the way that we have measured things so far,
Hmm.
um, it's one perspective,
Yeah.
right? We look at our metrics, and we built entire systems and entire teams based on those particular metrics.
Yeah.
Challenging those metrics is really difficult, like changing an entire system, especially for the large corporations that are
Hmm.
kind of leading the path.
Yeah.
It would require millions. It would require systematic changes to the way that they're not only building their models, but the way that they're making decisions and measuring themselves as a company. And so, what I think is important is to remember that transitions or changes need to bring a little bit of the old with a little bit of the new.
Yeah.
There is no, like, drastic changes are very difficult.
Yeah.
It would require something like a catastrophe, which hopefully we won't have, right? Like,
Yeah.
that's the only other way to create, like a complete 180 change. But in a case like this, I think that speaking the previous language while peppering in the benefits of looking at these risk models differently
Hmm.
is the only path forward. Otherwise, it will be too costly. And
Yeah.
that's basically, I think that's my guiding principle is, proving that by reducing biases, we can actually increase profits. That is a language that I think a lot of companies can actually understand and get behind.
Yes.
Because that's how we measure,
Yeah.
success. No matter what, we live in a capitalistic society. And
Hmm.
so we need to look at, the metrics that we have already baked in our systems in order to leverage those same metrics to the benefit of society as a whole.
Yeah. So I want to switch gears a bit. This is
Okay.
a nice little bridge to Kindly, because you are building a company, Kindly,
Yes,
that is essentially debiasing algorithms for financial services companies.
indeed.
Can you describe a bit more of what kind of how you got to the idea, and also how it's executed, how you help companies change really in a slow way, so they don't have to
Mhm.
replace their entire tech stack.
Yeah. So first, I think it's good to clarify that we don't only aim to debias algorithms. I think the algorithm is the final step, right? I think that most financial companies nowadays are exploring, multiple ways to implement AI,
Yeah.
and also they care about the risk of these implementations, right? So
Hmm.
we need to better understand what their pain points are, and those pain points have to do with regulation, like the AI Act.
Yeah.
They have to do with also how to better serve their customers and how
Hmm.
to avoid things like churn. So what we're doing at Kindly is helping companies gain broader visibility into the populations that are typically not measured,
Yeah.
right? Which is vulnerable populations. Uh, and we are basically guiding ourselves by the definition of the European Commission, and very much guiding ourselves to the new requirements of the AI Act,
Hmm.
to help companies not only mitigate biases towards the end of the data lifecycle, but actually gain insights into how they're treating the customers from customer acquisition to data acquisition to data validation to
Hmm.
all the way to the way that they're building the algorithm. And the reason why we like to do it that way is, obviously, it's the best way to be fully compliant, but also it's the best way to gain insights into their process to reduce costs, right? Like if I am, I don't know, ING, and I have spent millions not only on building these models, but also in acquiring external data, in acquiring new teams, and building a model is very costly.
Hmm.
Then I want to make sure that I'm fully compliant, and I'm also building the best, most accurate model as possible
Yeah.
from the beginning, not towards the end when I have to kind of restart the whole thing, waste a whole
Yeah.
bunch of time, and spend a whole bunch of money on retraining costs.
Yeah.
Um, so what we're doing there is essentially empowering the data scientist and the risk team to gain visibility and create new habits that essentially help them create better models from the get-go.
Okay, so by changing the perspective of the data scientist, you actually influence the data models that are used. You influence also the AI that is
Correct. Well,
being built.
correct. I think it's also empowering the data scientists to improve their data hygiene and incorporate new habits
Hmm.
into their data lifecycle.
And
And
those new habits then pertain to
bias reduction.
undervalued groups. And, and,
Correct. Correct.
and maybe also good then to share a bit of the definition of, how do you say, less well understood people.
Yeah. So great
So
question. So
we've had some examples like people with a
yeah,
disability,
yeah,
be that in a
yeah.
wheelchair or otherwise.
Yeah. You were asking me earlier about the differences between the EU and the US, and I
Uh,
think this is one of the big ones, right? Like in the US, the language around discrimination is that models cannot discriminate on the basis of gender, race, disability, age, etc.
yeah,
But when you define it like that, it also means that the models cannot, what they call positively discriminate for groups
no,
that are usually less represented,
hmm,
right?
yeah,
Because you cannot fix that. Whereas the language in the EU pertains more to equal economic opportunity, equal access to economic opportunity.
yeah,
Or it's essentially the same groups, except the European Union actually has an expanded definition, which includes, digital literacy, for instance, or lower income people, actually.
yeah. But they
Um,
also look at, if I hear you correctly,
mhm.
because I don't know the definition by heart, but if I hear you correctly, they look at the outcome. So how
They,
you get
yes,
to that outcome is
yes.
maybe less material, whereas in the US, it's this is what you can do, this is what you cannot do,
Oof.
which
Okay.
as a result may have the wrong outcome, but at
Yeah.
least you've complied to the law.
Yeah,
So
yeah, yeah,
hey,
yeah. I think it's very different. There's a few things that we're skipping, right? So
hmm,
there's essentially regulations that apply to financial services,
hmm,
right? That have existed for a while,
yeah,
and then new regulations that apply to AI models overall,
yeah,
right? So, and the way, as I was saying, in the beginning, is I think the way that we measure risk, or that we, classify risk,
hmm,
rather, in the EU, has more to do with the way that it affects people,
yeah.
which I think is, really cool.
Sorry,
Whereas
that's what I meant by outcome based.
yes, 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 yes. So exactly. So the way that it affects economic opportunity,
Hmm,
access to
yeah,
healthcare, access to these things, which I think is super important.
hmm,
Whereas in the U.S., at least the last legislation that unfortunately didn't pass in California, but one of the reasons why it didn't pass
hmm,
is because the way that they were defining risk was on the cost of the model to be retrained.
Yeah.
So, it basically would mean that, a model is high risk only if it's very, very expensive to retrain,
Yeah.
not necessarily on how it might affect people.
No.
And that is, of course, that's because they're relying on the fact that there's other legislation that will, also protect people to a certain degree.
Yeah.
But the reality is that, a small model, a bank made model could have, equal to more harm than a large model, no matter what it costs to be retrained. So, in many ways, I personally think that the definition here in the European Union protects people ultimately better.
Yeah.
But it also means that I think it's a little trickier to measure the quote unquote black box in the EU, because you would require to then have explainability on how you build those models,
Mm-hmm.
and have higher explainability and higher visibility into the methodology process, which is
Yeah.
again, part of the reason why we build Kindly the way we did, right? Like we're building it both as a optimization tool in terms of revenue, as a visibility tool in terms of giving you full end-to-end view on your data lifecycle, but also it's technically an audit tool. So companies can actually hit all of the requirements of the different ISOs that pertain to the AI Act, and
Yeah.
there's quite a few.
Yeah. Yeah.
So it's
There's
not an
quite a
easy,
few
yeah,
ISO standards for sure.
it's not an easy requirement, and
Yeah.
it's also so new, right? So what we want to do with Kindly is also like, we understand that this is a new requirement. We understand that while every company tries to do their best to create the most accurate models and the most responsible models,
Mm-hmm.
um, they lack the inherent tools, and they lack the know-how, and they lack a lot of times the time and the resources to be able to produce something that is high quality and ensures that they're fully compliant.
Mm-hmm.
So this kind of cuts through the chase and truly empowers scientists to be able to adopt this as as they're building their models, as they're creating what they need to create.
Yeah. But then also creating the transparency that is needed for audit purposes in the process.
Correct, correct.
Cool.
Hopefully, hopefully, once you empower, I think the first few, the way that I view it is like the first companies that adopt Kindly, and so far that's true. The companies that we're talking to in terms of doing our pilots in Q1 next year
Mm-hmm.
are companies that care about inclusion from the beginning, right? Like that they have the higher standards of inclusion. And ironically, also by virtue of doing that, they also have the higher standards in data management. So, by definition, the companies that first adopt tools like this
Mm-hmm.
are the most responsible companies. And so, I think that as regulation comes into play, as regulation gets enforced, we're going to, of course, see more and more companies both exploring how to adhere to these requirements, but also, struggle with internal changes and how to improve their own processes to adapt
Yeah.
to the new regulation, and hopefully we'll be there to help them out.
Yeah. How do you get to a point that banks don't see this as just another regulation, but as
Mm.
a sort of more regulation that really gets to the core of their business, especially going forward? How do you get them to adopt this?
You know, the way that I see this is very much very, very similar to GDPR or PSD2 when it was first enacted. I
Hmm.
think that the majority of the industry kind of took a step back and, kind of like a wait and see approach,
Yeah.
and didn't actually do anything. And
Hmm.
then at the very last minute, kind of threw all the money possible to it.
Yeah.
Um, Whereas the early adopters immediately saw benefits in terms of consumer trust, and in
Yeah.
terms of speed, and in terms of adaptability. So I think that the way that the most competitive banks and the most competitive companies in general, and the smartest companies approach these things is being a pioneer on something that is for responsible business practices,
Hmm.
especially when in the case of Kindly, at least, we're providing a tool that actually gives you revenue insights, and insights into what you're missing in terms of total addressable market, is a much bigger incentive than the wait and see approach, and it's less costly. A lot of banks and a lot of companies kind of take a step back also because of the cost of retraining, right? And the cost of shifting existing practices. And I think that's one of the biggest gaps. And so making tools that are easy to adopt and kind of intuitive is also and kind of be kind of integrate in a bank's data ecosystem
Hmm.
um, easily is also a way to kind of cut through all of that friction. um, I think that ultimately it has to do with the bank's culture. Like,
Hmm.
as I said before, the early adopters for us are banks that natively care about this stuff, or that have learned from their mistakes and
Yeah.
want to actually invest in products that include more people.
Hmm.
And that's what makes them more competitive, and that's what makes them credible in the industry. And it's true, like these are uh, at least from a stock performance perspective, and from a consumer trust perspective, these companies that we're working with are at the top of the top.
Okay. I want to move towards two statements that I recently ran into. One is actually my own. I'm convinced that this is actually true. And the statement is on debiasing algorithms, debiasing AI, or reducing bias. Is that the only way we can do that is if we add as much data from
Mhm.
diverse sources as possible. So I can do all the tooling. I can do everything in terms of IT, a tech stack
Yeah.
that I need. That will not work unless I add a really diverse pool of data.
Hmm.
Because I think in part it's also about the data not being there. And sometimes in banks it will be there, but it's not, it's undervalued, and
Yeah.
that's where I think your tool comes in. But I
Yeah.
think for in a broader perspective, it's much more about adding data to AI to
Hmm.
shift, really shift or add biases.
Yeah. Yeah. So I have a few things to say to that.
Yeah.
I agree to a certain degree. I mean, a part of our solution is precisely to help companies, like we generate data to represent vulnerable populations, to help companies retrain their models to
Hmm.
improve their accuracy and ensure that they're kind of fixing the gap. So very much aligned with what you're saying. However, the reason why we're building the tool in with a broader data lifecycle in analysis in mind uh, is for a variety of reasons. One of them is, um, interview after interview and study after study shows, and this is a tricky one, is that the human center loop step that is required in and that is, I think, very smart to do when you're building these systems, um, in many cases actually increases the bias. That is to say, an individual's innate biases ultimately, when making a decision or altering the rules, will actually a lot of times increase the bias in the outcome. And so
Is that confirmation bias?
it is many things, right? Confirmation bias is definitely one of them. It could be negativity bias. It's just just pure old fashioned racism.
Hmm.
Like many things that can be happening, and a lot of times people don't even notice, right? But
No.
so that's one of the things that that we want to ensure that we give visibility to.
Mhm.
The other thing is, as I was saying, in the early part of the conversation, there are flags that we have created that are actually mispricing the risk of a
Mhm.
particular consumer. So a lot of times is not only a data problem, is very much an algorithmic issue. It's
Yeah.
very much about the weight that we have placed on a particular indicator
Yeah.
that is just wrong, right? And that is more of a signal of a problem in the consumer journey than it is an issue of the consumer itself or even the algorithm,
Yeah.
right? So, for instance, with my particular example, if the company that I was doing business with had either an accessibility flow where they could have a video call with me or something like that, or
Mm,
biometric authentication where they could verify that it was me vis-a-vis my documents, which is something that they could have done and they
mhm.
have implemented since, by the way.
Yeah.
They would have, yes,
I would have
they
hoped
they
that.
would have, exactly, all of these would have been fixed. So it
Yeah.
wasn't necessarily just the algorithm, it's the fact that the algorithm didn't take into account that their consumer journey was faulty. But all of those assumptions are baked in the algorithms no matter what.
Uh-huh.
The other area, so we were talking about how a person's innate biases, knowingly or unknowingly, can end up affecting the end algorithm and the end outcome more than the actual data, uh,
Mhm.
and everything else. We have to understand that it's a data engineer, the one that is going to be massaging the data and validating the data and looking at the different data sources. And
Mhm.
so that process can actually carry a lot of different gaps,
Yeah.
right? So when we think about algorithmic bias, we're actually just looking at the end picture of a lot of different steps that could go wrong. And so that's why this is exactly why it's so important to not only have full visibility of all of these steps, but create new habits in your organization.
Yeah.
Like whether it's with Kindly or with somebody else, having or being able to shift these habits and being able to improve the quality of your data lifecycle cleanup process is ultimately the only way that you can improve not only bias reduction but also the accuracy of your models, which is ultimately what we all want.
Yeah.
And when you look at the aggregate of what we call vulnerable populations,
Mhm.
we're not talking a small amount, right? Like we're talking about something like that represents around 40% of the population.
Mhm.
40% of the population. That means that most algorithms, most rule-based systems also, right? Like both the rule-based and the algorithms, which are essentially
Mhm.
built on the old rule-based systems, are incredibly inaccurate. And
Yeah.
if we then consider that nowadays a lot of financial institutions and many companies outside of finance are implementing AI with use cases like customer service or
Mhm.
a lot of times product management, that sort of thing. If you are leveraging an out of the box system, and out of the box systems have error rates that range from 10% to about 30%, depending on which
Yeah.
system you're using, which is not a small amount. So if you're considering a 10% to 30%, and then on top of that sandwiching all your data, all of your new systems, all of your assumptions, a lot of different possible errors could happen there in that entire life cycle. So
Mhm.
what accuracy do you really have in your systems at the end of that? How trustworthy are your algorithms
Yeah.
and are your outcomes at the end if you don't really have the right habits, if you don't
Yeah.
really have the right tools? So that's essentially the highest risk, is not only that we're going to exponentially affect people from disenfranchised communities, but also the fact that we don't even see the impact that we already have, a negative impact on the business itself,
Yeah.
right? Like we it's a huge question mark that is affecting the business, that is costing the business, and they don't even know.
Yeah. But what I'm hearing you say is that just throwing data at it is not the only solution. It's about
No.
habits, it's about tools, and yes, maybe also about adding the
Well,
less
it's a combination. It's a combination.
yeah.
Yeah, when you're talking about adding data, to me it also means being like improving the empathy, the research, the communication with your customers,
Mhm.
right? And that's part of the insights piece that we have at Kindly, is that you want to better understand your customers so you can build better products, so you can
Yeah.
reduce so you can reduce those gaps. You don't want friction all
No.
over, and you want to be as accurate as possible because, insult rate is costly, right?
Yeah.
Declining customers that are good is very costly. And that's essentially like the goal here is to create the best of both worlds.
Yeah, and to really enable also banks and financial institutions to accept customers that previously would have fallen off
Correct.
the wagon.
Correct.
Okay, so I want to move to the second statement. It's actually on AI regulation, and this is not mine; it's yours. It's AI regulations like the AI Act and
Mhm.
the European version of it
Yeah.
are not there to restrict us, but to let us innovate responsibly.
Yeah.
What do
Yeah.
you mean by that?
Ooh, I'm gonna give you my example, my favorite example. So
Yeah.
I don't know if you remember years ago when PSD2 was enacted. Right now they're working on PSD3.
Mm-hmm.
PSD2 changed a lot of things. They, of course, there was a mandate around second factor authentication, which is the reason why today we have
Mm-hmm.
second factor authentication everywhere.
Yeah.
Um, but also, it created different data exchange rules. It essentially created the space for fintechs, smaller fintechs to exist, right? They essentially, by creating rules that incentivize the exchange of information to a certain degree between banks, a whole new generation of fintechs was born.
Yeah.
But not only that, like we know that regulation in Europe, this is well known as the Brussels effect,
Mm-hmm.
has influenced the way that regulation and technology gets adopted elsewhere. So
Yeah.
one of the things that came out of PSD2 was the broad adoption of ISO 222, also known as, like basically the the guardrails behind SEPA.
Mm-hmm.
And so this same international standard was the basis, or is the basis, of what essentially the person to person transfer revolution in
Mm-hmm.
the US. So this happened a few years ago. I was actually advising the Federal Reserve. I was part of a couple of huge task forces in the US, both for faster payments, which is why they called it in the US, and secure payments.
Mm-hmm.
And I was part of their data protection working group. And what you learn from that is that the regulation in Europe and these new mandates influence very much the way that things were done in the US as well, and created almost global standards. So in a lot of other countries, those same standards are being implemented, perhaps with different names or different flavors.
Mm-hmm.
But I believe that, I think this is behind the person to person rails in Mexico, also
Mm-hmm.
PIX in Brazil, if I'm not mistaken. I think also in Thailand, if I'm not mistaken. So basically, it's kind of been adopted with different flavors all over the world,
Yeah.
right? So that's what I mean. Is regulation can definitely can be annoying, but mostly when you are a gigantic corporation that needs to change practices,
Yeah.
right? That needs to change a lot of things. It actually creates the opportunity for disruptors to enter the system
Yeah.
or for collaboration. And it in many ways has made the life of consumers much easier, right? Because it has, I think we've seen how in the U.S. it's transformed the payments landscape
Yeah.
from being primarily credit card based, which is still a very strong payment method in the U.S.
Mm-hmm.
But now payments to payments is by far a broadly used payment method in the U.S., and it's transformed the way that consumers communicate even with their own banks.
Yeah.
So and even more so in regions like Latin America, right? So I think I would invite people to see
Yeah.
regulation not only as a bad thing, but also as an opportunity. And I feel like that's very much, a big part of the inspiration behind Kindly is
Yeah.
exactly that. It's like it's an invitation to not just see regulation as a penalization, but as an opportunity to do things better, to better understand consumers, to create better models, and to implement AI responsibly.
And also to create more profit.
And definitely to create more profit.
Yeah.
Absolutely.
So Going back a bit to the financial world, because you're a solo founder.
Yes.
Now, let's say the usual story about solo founders of startups is that if you get if you're a team of white men, then you get funding for an idea. If you're a mixed team, you may get funding. If you're a team of women, it's going to be very challenging to get funding. And then there are solo founders like, oh, well, good luck with that. What has your journey been like?
Oh, that's funny. Yeah, yeah. I mean, when I look at myself, I remember, and I have to remember something
Hmm?
very peculiar, which is the representation of women in executive, roles in financial technology, but elsewhere is minimal, right?
Yeah,
The representation of disabled people is less than that.
yeah,
The representation of Latinas in, in executive roles
yeah.
is minimal, and yet I've done all of that and more. And I think it took me years to understand that the value of that.
Hmm.
It took me years to understand that, you know, being an outlier is not something by chance. It's quite the opposite, right? Like
Yeah,
being an outlier is very much a testament to one's talent or a testament to one's potential. Um, so I'm genuinely hoping that both the market sees that. However, that is also very much ingrained into the product, like understanding the statistical chances of someone like me, being successful or even being in the position that I am are minimal. The fact that I'm here says something.
yeah.
But that doesn't mean that it's going to open doors, right? Like that means that I've learned to open my own doors. That means that I've learned to uh, take paths or create paths for myself that don't exist. And I think that's a lesson for all of us out there that are solo founders, whether you
Mm,
are, a minority or not. I think that um, if you are a solo founder, first of all, in today's world, in almost 2025, it's a lot more feasible because we live in a world of AI now,
yeah.
right? So you don't, it's actually outdated to think that you need to have a team of whatever, 5 6 co-founders, whatever it is,
Mm,
to have a successful company. I think that we are in the era where it's actually possible, and if not encouraged, to leverage all the tools that you have at your favor to create whatever you can, as much as you can.
hmm.
And it actually enables you to work with faster speed, to have, I think, better use of the resources around you,
Hmm.
um, and hopefully also because it's less costly for me to run my company, right? Because
Hmm.
my payroll is smaller.
Yeah,
I'm able to be more nimble and able to hopefully get to profit or profitability faster. And I think that is the paradigm that is shifting in venture capital right now. Whether or not, whether or not that's for female founders, I'm not sure.
hmm.
We'll see about that. But at least, there's a lot of conversation in venture capital around the next billion-dollar company that is going to be started by a solo founder.
Yeah.
And I think it's a lot more feasible now.
Yeah,
And I don't know. Yeah.
for sure, for sure. But
Yeah.
the traditional argument was, as I understand it, has always been that, like, okay, workload wise,
Mm,
there's more possibilities, and especially with AI, absolutely there is.
yeah.
Don't get me wrong. And in terms of cost of building a solution, I think
Hmm.
you're right to point out that those costs will be lower.
Yeah.
However, if I look at it from a white man's perspective, to put it that way, what I see in a solo founder, so that doesn't matter if it's a man or a woman in this
Hmm.
case,
Hmm.
but a solo founder brings a specific continuity risk, because what happens if that founder,
Hmm.
I'm dependent as a financier
Hmm.
on one person, whereas otherwise there's a sort of balance of powers inside the company already. And two, if that person sort of something bad happens, then
Mhm.
there's nothing. Whereas
Yeah.
again, if I have like two, three co-founders, the
Mhm.
other guys, of course,
Yeah.
or girls will
Yeah.
pick up.
I think that's a little bit of a, not necessarily a myth, but I think we forget to calculate as per usual, right? Like we know what we know, but we don't see all the failed companies that have crashed because of co-founder, poor relationships or,
Yeah.
co-founder gaps. So the ones that make it are very much the exception. First of all,
So again,
so
this is mispricing.
I think so. I think so. I mean, I think that I don't want to discount that the relationship of some teams might be spectacular and you can indeed rely on one another,
Hmm.
but I also think that you can have early employees with equity that are fantastic and that are reliable and that will carry through
Yeah.
without having the co-founder title. I think that, I like the founder thing for me is very personal, right? Because like I'm willing to bleed for my company. I'm
Yeah.
willing to do anything for my company and I can carry it through, right?
Hmm.
And again, I'm disabled. I'm definitely higher risk in that sense, right? Like I could indeed burn out. I could indeed go through, a personal problem, and I have. But the reality is much easier for me to find solutions and to adjust myself or to find some sort of continuity solution, uh, and know my limits and know what I can do than it is and carry this through than it is to manage a team of four and their egos and their expectations and whether someone leaves and someone comes back and all of that has happened to me by the
Yeah.
way, right? So I also, whether when you have co-founders, it's a lot easier also for a couple of those individuals to say, you know what, when things get tough, like I can't, like this is too much for me, I'm gonna
Mm.
go elsewhere. And typically you will have the one person that doesn't quit and leads. So again, I question the value of the term co-founder,
Mm.
unless the entire team is willing to do everything that it takes to carry the company through, and that is extremely rare.
Yeah.
It's a lot more, I personally, I think it's a lot more common to see people that are extremely committed, that will give everything on the table, and nowadays is definitely feasible to be a solo founder and have and build little by little a small but extremely committed team to the mission of the company, whether or not they call themselves co-founders or whether you want to give them
Mm.
that title is entirely dependent on the resilience of the team. I feel like solo founders are a lot more resilient and a lot, yeah, they're able to carry through and morph and do whatever is necessary to a much more flexible degree than an entire team.
Amen.
Or so, I mean, we'll see, right? We'll see. I
Yeah.
think that I think that the
No,
next 5
but
years will let me know a lot. But that's been my experience.
yeah.
This is not my first company.
No.
And what I've realized is that, yeah, in the past I've had beautiful teams, and even in this one I've had beautiful team members that believe in the mission and that really want to carry through. But the reality is that this is a very tough road, and it's
Yeah.
not for everyone.
Yeah.
And so, but I definitely have chosen it for me very consciously, knowing the risks. So I think there's value in that.
Cool. Last question I have for you. So I'm on a mission to make DEI and tech obsolete, or to make it the new normal by the end of 2032. So that's in eh, yeah, 8 years from now, bit
Okay.
under. What would be your expert opinion on how to get that done?
Hmm. I have slight bad news for you.
Oh.
Well, I like your mission. I do think it's possible to make DI a normal,
Hmm.
but the reality is that our profiles of biases vary. Like that's a sociological truth.
Yeah.
Yeah. What, like the minority groups, the political and socioeconomic realities in 5 to 10 years are going to be, in 8 years
Mm.
specifically, are very likely going to be different.
Yeah.
And so, and unfortunately, humans have very short memory, right? We see
Hmm.
that in the US. We
Yeah.
forgot all the rights that women had, and we're going backwards and
Yeah.
then forward and then backwards and then forward. So
Hmm.
it's not a linear solution.
No.
So I think that we will always need to some degree to advocate for those who are less represented, and we will always have a gap in representation
Yeah.
for as long as we have the same systems and the same political and socioeconomic systems leading, right?
Hmm.
I think that we can create DEI as a regulatory imperative and as a habit. So
Hmm.
I think that's the way that we can lead forward, is to create habits that allow us to measure and be aware, be self-aware, and measure the value, both economic and social, of these gaps.
Hmm.
But I also think that we will always have to work on it. We will always have to be advocating for other groups. We will always have to take pause and analyze ourselves, and it's a good thing, because if we didn't, we would take everything for granted.
Yeah.
That's what I think.
Yeah. It's a bit like training muscles.
It's very much like training muscles, and it's a little bit like training muscles on an older body
Yeah.
that is gonna that you're gonna need a little bit extra, right?
Yeah.
Yeah, like our demographic profile changes, our socioeconomic profiles change, our political environments change,
Do
our
you
regulations. So
do you see a sort of move towards more inclusion?
depends on where. In the European Union,
Yeah.
yes. In the US, I think it's clear that they're moving towards shying away from at least funding a lot of DEI related programs.
Hmm.
So I actually see the opposite move. And depends on where you're talking, right? Like if you're talking, Canada, for a long time had a lot of DEI related legislation. Right now, it might be like, with the political shift, also,
Hmm.
things might be changing. The UK and France also had like more of a blue, or more of a inclusive shift as well, so they're
Hmm.
going to invest that. So there isn't a blanket answer. It depends on where,
Hmm.
and the behavior of one country typically kind of influences others.
Yeah.
So it's very much tied to our human behavior and our socioeconomic realities. So I don't see it ever being, a homogeneous solution.
Yeah.
Yeah.
I understand that part. I understand. Hey, Carla Canino, thank you very much for a wonderful conversation. Really enjoyed
Thank
this.
you.
If people want to learn more about you, connect with
Yes,
you, and learn more about Kindly and the
absolutely.
solutions you offer, where would you like to send them?
Yes, kindly.ai
Okay.
is our site, and you can find me on LinkedIn at Carla Canino. Super happy to connect, and thank you so much for having me. It was fantastic.
Yeah, really enjoyed. Thanks.
Thank you.
Once again, thank you for being a guest and a really good conversation about
Thanks.
AI and creating a habit of inclusion. Um, and listeners will include the links in the show notes. So
Thank
until the
you.
next episode, keep being awesome. Well, that's a wrap. Thank you for listening to episode 84 of Women Disrupting Tech with Carla Canino on the Kindly case for fair, unbiased, and profitable AI. Carla and I hope that you found our conversation as enlightening and inspiring as we did. And if you'd like to learn more about Carla and Kindly, you can connect with her via the links in the show notes. As usual, you can find the show notes at womendisruptingtech.blog. On the same website, you can also become a member of the Women Disrupting Tech community. Members get early access to new episodes, and in the weekly newsletter, I'll share with you what I learned from each of the episodes. So check out the show notes for a link. When you're looking for a role model to inspire your own hero's journey in tech, I invite you to check out one of the other episodes of this podcast on Spotify, Apple, and YouTube. And if you're a regular listener, Please give the show a rating or a review because that way you help other people discover the podcast. If you're a male ally and you want to help the women disrupting tech make this podcast obsolete by the end of 2032, there's a simple thing you can do. Please share the podcast with friends, family, and coworkers because this way you give my guests a platform they need to make it happen. Finally, if you want to connect with me, you can reach me via dirkjan at womendisruptingtech.blog or you can send me a DM on LinkedIn. On LinkedIn, simply type in my name and you'll find me. With that, I wish you a wonderful day. I hope to see you in the next episode. And until then, keep being awesome.